Smokas, folks, we have some movement in the markets. Holy smokes, okay? The Dow is down over 742 points as of recording this right now. I've seen it down over 800 points here today, down well over 2%. And this comes after a long period where we haven't had much for downward moves, right? And so all of a sudden you get a shakeup like this and it's like, whoa, oh my gosh, the stock market can go down. Oh my goodness, right? And so in this video, we got a lot to discuss, okay? We got a lot to get into in relation to what is actually going on in the market right now. Like, why is this happening? What's going to transpire here, okay? Also going to tell you guys kind of what I'm doing right now in the market as well, okay? And like I said, Dow's down big today. NASDAQ down big today, right? Down over 2.5% here today. These are moves that, we just haven't gotten used to seeing recently. 2020 was a different, animal, especially when Ronan was going crazy. It was like the market seemed to be crashing every day during, kind of February, March. And even April, there was a ton of volatility, right? And so we got very used to seeing a lot of drama in the stock market, but recently it's been so calm that all of a sudden a hurricane comes in and we're like, what in the heck is going on here, right? The Russell 2000 down over 3% as of recording this right now. Huge move down for the Russell here today. If we look at the volatility index, the VIX up over 26% today. Oh my gosh, okay? Yeah, just out of nowhere, the VIX just boom, just went like a rocket ship up to the sky. My gosh, what a move up for the VIX here today, okay? So like I said, guys, we're going to get into a lot in this video. I'm going to give you my perspective on what's going on. All I ask in return is that you smash that like button. That's literally it, guys. Appreciate you as always, and let me know in the comments section if you guys think this is going to continue. If you think this is just a 1 or 2 day big drop here, then we're right back up. I would love to hear from you guys as always, okay? So first off here, Dow Jones Industrial Average. This is pretty much the lowest I've seen it since around June. June 17th or so. Dow actually closed that day at 33,290. Right now we're at 33,8. We'll see what happens. There's still over an hour left in the trading day as of I'm recording this. So we'll see what happens here. But yeah, it's a big downward move. And like I said, when you haven't had a lot of these and all of a sudden you get one, it's a real shakeup in the markets, right? Dow slides 800 points as market rout deepens, on track for worst day since October of 2020. We're in September 2021 right now, right? So, I mean, this is, probably going to be the worst day in almost a year. So this is definitely some food for thought here that, it's not like it's a small number or something like that. When you have your worst day in a long time, I mean, that just speaks like, we've been in a pretty good market. And also we just, it's a big downward day here, big downward day, right? Now, where does it start here, okay? China's embattled developer Evergrande, okay, which means the big ever, I guess, is on the brink of default. Chinese property giant Evergrande is on the brink of collapse as analysts warn the potential fallout could have far-reaching implications that spill outside China's borders. Quote, Evergrande's collapse would be the biggest test that China's financial system has faced in years, says Mark Williams, chief Asia economist in Capital Economics. Here's how bad the problems are and what's in store for investors. So first off here, China's been in the news, at least on our channel, for a while now for some bad news, right? In relation to kind of what's been going on in Macau and all the uncertainty in relation to that, right? Plus, we've obviously been talking about Alibaba and what's been going on with a lot of Chinese stocks. And there's been a lot of distrust in the Chinese market. And it just seems like it's almost like in an uninvestable space. Like if anybody says anything China related, it's like, no, don't even talk to me about those sorts of stocks because there's no trust there. Right? It's not like a usual like buy the dip opportunity where it's like, oh yeah, stock's down. I like, okay, buy. This is down, buy. In this situation with what's going on, in China recently, it's been scary. Let's be quite honest. It's been scary, and it's like, do I really want to buy the dip with everything that's going on there and the distrust and that's what it really comes down to, right? The world's most indebted property developer has been scrambling to pay its suppliers and warned investors twice in as many weeks that it could default on its debts. On Tuesday, Evergrande said its property sales will likely continue to drop significantly in September after declining for months, making its cash flow situation even more dire. The Chinese developer is so huge that the fallout from the potential failure could hurt not only Chinese economy but spread to markets beyond. Now, if you're wondering what is the debt load looking at for this company, from my understanding, it's around $300 billion in debt. Okay. Now we have some huge companies with some huge debt loads. I mean, usually if you have a company with tens of billions of dollars of debt, that's a huge number. 100 billion is crazy, right? $300 billion of debt. It's like, what in the world's going on here for a company most people probably never even heard of, okay? Banks have also responded to its deteriorating cash flow. Some in Hong Kong, including HSBC and Standard Chartered, have declined to extend new loans to buyers of two uncompleted Evergrande residential properties, said Reuters. Rating agencies have repeatedly downgraded the firm, citing its liquidity problems. Evergrande's problem intensified last year when China introduced rules to rein in on borrowing costs of developers. Those measures place a cap on debt in relation to a firm's cash flows, assets, and capital levels. Now, look at this, okay? This is Evergrande's stock in Hong Kong, and look at that, okay? And like I said, this isn't like this is some small company. This company has $300 billion in debt, and from my understanding employs hundreds of thousands of people and supposedly has indirect jobs of many millions per year. Okay, and think about it, like, you know, if you're going to have $300 billion of residential debt and you know, you're building all these properties and things like that, you're probably going to employ a lot of people for building those, right? So who will be affected? The pool of affected parties include banks, suppliers, home buyers, and investors. Think about it like this for a moment, right? Imagine this company fails here and they can't pay their suppliers. Well, all of a sudden those suppliers are out a bunch of money. Now, all of a sudden, what if that slows down the entire, you know, real estate market or commercial construction market in China in a major way? Could a bunch of suppliers then go out of business, or are their businesses devastated? So which means they do a lot less business. Home buyers, you know, what happens with that whole situation, right? Evergrande warned this week that its escalating troubles could lead to broader default risks. It said that if it can't repay its debt, it may lead to a situation of, quote, cross default, where a default triggered in one situation may spread to other obligations, leading to broader contagion. Another quote from Mark Williams here, who's Capital Economics chief Asia economist. Quote, a banking failure triggered by the collapse of major property developers was the single most likely scenario that could lead to a hard landing in China. And, you know, this is something, you know, there's been a lot of talk about for a while in relation to, you know, what could happen with the property market in China. But once again, think about what happened in the Great Recession in the United States, right? Which, you know, obviously there was a you know, ton of debt out there, like a ton of bad debt too, right? You had to, you know, get rid of all that. Took years to do it. You know, home builders were devastated during that time. Suppliers were devastated to the real estate markets, right? Because there just wasn't a lot of construction, and it led to a lot of folks going under, whether it be banks, suppliers, home buyers. Yeah, you know, just folks in general, right? And investors obviously lost a lot of money in that situation. So it got real ugly real fast. In this Evergrande situation, 300 billion, they go down. Does it take another one down? Does it take another one down? Does it take whole banks down? Does this, you know, this is the type of stuff, you know, absolutely is worth talking about and thinking about, okay? Now, really quick here, this is really important. It's likely that the government will prioritize home buyers and banks over other parties. So not investors. It will prioritize home buyers, supposedly, and banks, okay? Policymakers' main priority will be households that have handed over deposits for properties that haven't yet been finished. The company's other creditors would suffer. So think about this for a moment, right? This goes into even a bigger systemic issue with China right now. We got the Alibaba situation, right? We got the problem with Chinese stocks in general. We had a whole education stocks fiasco, you know, very recently, right? You have the Macau situation. You have bad news out of bad news coming out left and right out of China, and things that make investors distrust China, right? And now you have this Evergrande situation, and if the government doesn't really give any priority to investors at all, right, you end up in a situation where, you know, investors even more so, and I'm not just talking about outside China, I'm talking even inside China, are going to be looking and saying, I want to invest in more stable markets. Because what do investors look at, right? They look at two things. They say, what is my return? Like, how much can I make, right? And what is my level of risk? And for most investors, the risk part is actually more important. They want to feel like somewhat safe when they invest. They want to feel like, okay, I'm probably going to get my money back and then some, right? And make a profit. And when you have all this that's going on in China, it's leading to more and more of a situation where folks like myself that are outside China are like, why do I want to buy China this, China that? And you're going to have more and more folks inside China that have money that are saying, do I really want to invest in my own country when this is going on, that's going on, this is going on? Why don't, and clearly the government is not in favor of investors over there. Why don't I go invest in a more stable market that is proven to generate returns for investors for a long, long time? And so this is where you get into that bigger, even systemic issue in China, guys. And this is some food for thought there. And so this is actually going to bode well, in my opinion, for markets like obviously United States, European markets, maybe even Canadian markets over time, more stable markets. Folks are going to look and say, yeah, I think I'll get my money out of there and go invest in places I feel is more stable, right? And, there's been a lot of documentaries done for the last 5-10 years on China's ghost cities they've been building over there. And, this gets into the whole property developer situation, and it's quite a strange situation, right? They build these massive ghost cities with towers and towers and towers, and just like, it's incredible, right? And hospitals and like everything you possibly imagine, even like stadiums and arenas, malls, and with basically no one living in them, right? It's one of the weirdest things you could ever imagine, and they build these ghost cities. And, sometimes they'll start to fill up over years. Sometimes it's a really, really slow try to build out. And you got to think about it for a moment, right? That's not the way humans get together. That's not the way this is done. This is not the way this has ever been done, right? It's like a few people come, and then more people come to an area, and then all of a sudden they're like, oh, there's enough people now, we need a hospital to take care of folks, right? Oh, now we need some restaurants. Oh, now we need some schools. Oh, now we need some shopping malls. Oh, now we need an arena, this and that, right? Now we need some parks, and it just starts building out over time. And if you try to force that, it's a tough situation, because it's like, when are just these hundreds of thousands or millions or tens of millions of people all of a sudden going to move there all at once, right? Like, I don't want to go personally live in some ghost city. There's going to be nothing to do, right? Because is a hospital even going to be open? Is a mall even going to be open? You know what I mean? Like, are the restaurants even going to be open? Probably not. You know why? Because there's not enough people living there. It doesn't make any dang sense, right? Like, it literally doesn't make any sense. I understand the concept of wanting to get in front of these things, but you get in front of these things by building the infrastructure ahead of time, meaning roads, highways, public transportation. That's how you get in front of it. But to say, I'm going to build all these residential towers left and right, all these office complexes to house millions and millions of people when there's no demand for it at that time, it is nothing more than pure crazy speculation, right? It's like, let's say I live in Nevada, okay? Hold on just a moment. So I pulled up a map of Nevada here, okay? Here's where I live, Las Vegas, okay? That's where I live right now. Now, let's say I'm like, I think we just need another huge city in Nevada. And so I raise hundreds of billions of dollars, and we just build this random, big, huge city over here, okay? And, it's not really close to Reno. It's not close to Vegas. It's just this massive city we build over here with hundreds of billions of dollars. And I build all these towers, and I build all these roads and all this stuff and all these hospitals and arenas and parks and all this stuff. Does that make any sense? No, it's the stupidest idea ever. It's so ridiculous. You can't even comprehend it. Like, it's so, ridiculous. Like, no, okay? No, that is destined for failure. Like, absolutely destined for failure. That's not the way you do this. That's not the way you ever do this. It's just generally a horrible idea. But companies like this have been doing it. China loves it, right? Because it makes China look great. Like, oh, we're building these massive cities all over the place, right? And also they love it from the standpoint of it does create a lot of jobs, right? This company says they supposedly basically give 3.9 million indirect jobs per year, all the construction workers to build all these towers that no one's living in, right? It's a lot of jobs. There's a lot of people going to need to build all those towers, right? And all those houses and all these skyscrapers and all this stuff, right? You need ridiculous amounts of basically construction workers to do all this, which is definitely going to give you jobs. And so that's why China loves it. But you get into a situation with this Evergrande here. I always think it's like Ariana Grande. I'm going to start calling it that. You get into this Ariana Grande situation, and, it's like $300 billion plus in debt. It's out of control, man. It's absolutely out of control. So now you have a boogeyman in the market, right? Which is Evergrande situation that is leading to fears of could this spill over to a lot more in China and take down China's economy in an even a bigger manner? Will the government back this situation? Will they handle it properly? There's a lot of question about that. There's some fear, could it spill over to the United States? So we have a boogeyman in the market now, okay? Not only that, but obviously large caps have been trading rich for a while. We all know this. We've talked about it several times on the channel. And so if all of a sudden you have a boogeyman in the market and you have large caps trading rich, it gives it even more, the market more incentive to sell out off of large caps. And guess what really moves the market? It's the large caps, right? If you're going to see the Dow down 800 points in a day, if you're going to see the NASDAQ down 2-3% in a day, it's going to likely because the big dogs in big tech are falling. That's just generally how it is, right? Now, meanwhile, the mid caps don't look expensive at all. They're pretty in line, and small caps have been trading super cheap. But at the same time, small caps and mid caps, and especially small caps, they don't control the market. They don't control the Dow. They don't control the S&P 500. They don't control the NASDAQ, okay? And those are the markets, those are the indices that everybody looks at. And so that's some, food for thought here in this situation that, if all of a sudden there's all this boogeyman talk and all of a sudden there's fear of contagion coming into the U.S. and you have this situation where valuations are pushed up, that leads us to a rough situation in the short term where people are fearful and they sell out of stocks in the end, right? Now, in terms of me personally, I'm buying. I bought some stocks here today. If you want me to go into detail on the particular stocks I've been buying recently, I can do a whole video about that maybe tonight or something like that. Just let me know in the comment section if you're interested in a video like that, okay? Now, the stocks I've been buying, obviously very, very more focused on the Russell type stocks, right? We just looked at that chart there. It's pretty obvious where the deals are, and that's where I'm seeing the deals right now are in the Russell. Now, if the whole market falls, it doesn't mean we can't see the Russell go down, because obviously the Russell's going down today, right? And, the thing I think about when in regards to the Russell, okay? I want to pull that back up for a moment here, right? So let's say the market falls even more. And by the way, we're actually a little bit lower. We're probably in here. Let's say the market falls more and the small caps are at a 13 range, a 14 range. Well, then we start talking about we're at some of the lowest levels we've been in the small caps for literally years and years and years and years. And so that makes me feel very, very comfortable and lets me sleep very, very well at night, knowing I'm buying into these type of stocks at some of the lowest valuations they've been at years. So this is why I don't fear small caps falling more, because it already is at a point where it's a great deal for the high majority of small caps. But if you get even lower, you get into this scenario essentially where it's just like no-brainer type money, right? Versus when you're buying stocks like, let's say the large caps that are up pushing near nosebleed valuations. So this is why I say it's a very important time to be a stock picker rather than just a general throw money out there type person, right? Not that that can't work. It's just, there's such a divergence in where the real opportunities are in this market. And usually these things are usually flipped a lot of times, okay? And so, yeah, I've been putting my money, into the small caps, including today in several different stocks out there, right? And that's where I see opportunity. So hope you guys enjoyed this video, kind of diving into that. The boogeyman's out there, no doubt about it, and you got valuations pushed up really high. It's going to make for a volatile market, and the VIX up 26% today. What a day. If you have any stock market related questions, go ahead and shoot me a text. Basically, I'll have a number down there. That'll be the pinned comment down there. Try to get back to at least a few people a day. If you're looking for the Hungry Bowl, don't forget to download that on your iOS or Android app store. We now have SEC filings on their earnings calls, news, financials in depth, and so much more. Keep track of the stock market in general, your stocks, cryptos, as well as read our daily newsletter. Also join us in Stock Hub. That's our free Discord chat. Much love as always, guys, and have a great day.